Broker fees are designed to confuse you. Zero commission isn't free. Here's the 5-layer framework that fixes it.
Here's the trick with broker fee comparisons. Almost every one you've ever read compares exactly one number, the commission per trade. $0 at Robinhood, $4 at IBKR Pro. Done. Robinhood wins. Except that's not how brokers actually make money off you in 2026. Roughly 70% of what you pay comes from lines that never appear on the marketing page. And here's the part that gets weird. The same broker can be the cheapest choice for one trader and the most expensive choice for another. That's not a paradox. That's the math when you actually price all 5 fee layers, not just the headline one. Layer 1, visible commission. U.S. equity brokers in 2026, Schwab, Fidelity, Robinhood, Webull, Tasty Trade, all cluster at $0 per ticket for retail. IBKR Lite is 0 too. IBKR Pro charges about half a cent per share with a $1 minimum. EU brokers itemize, ticket plus exchange fee plus regulator fee. For Forex, it's either bundled into the spread or it's $6 to $7 round turn per standard lot on a raw spread account. Fine, that's the brochure number. Layer 2 is the spread, the gap between the price you can buy at and the price you can immediately sell at. On Apple or Microsoft, 1 cent per share. On a small cap $5 to $20 stock, 2 to 5 cents. On Euro USD raw spread account, 0 to 0.3 pips, so $0 to $3 per lot. On a standard Euro USD account, $6 to $15 per lot. Here's why this matters. A trader doing 50 round turns a month at $10 of spread cost each pays $500 a month in spread alone. That number never shows up on your statement. It lives inside your fills. You only see it if you compare your execution price to the mid-market quote at the same millisecond. Almost nobody does. Layer 3 is where it gets interesting. Execution quality. This is slippage plus payment for order flow, PFOF. Here's how PFOF actually works. The zero commission broker takes your order, sells it to a wholesale market maker, and the market maker pays the broker a rebate for the privilege of filling you. The market maker then prints you at a slightly worse price than the best available bid or offer. We're talking half a cent to 2 cents per share worse than what IBKR Pro's smart order routing would have given you. Run the math. Zero commission broker saves you $1 of commission on a 1,000 share Apple order. PFOF route fills you 1 cent worse than smart routing. That's $10 of worse fill. Net, zero commission just costs you $9 more than the $4 broker. That's the trap. Zero doesn't mean free. It means the costs move to a line you can't see on your statement. And the more shares you trade, the wider the gap gets. Layer 4, holding costs. If you carry positions overnight, you pay. Forex swap kicks in at 5 p.m. New York time, and brokers mark the wholesale rate up by 1/4 to 0.5% per side. On equities, margin interest applies the second you trade on borrowed money. IBKR Pro charges 4 to 6%. Robinhood Gold 5 to 8, Tasty Trade and Webull 7 to 10. Schwab and Fidelity 8 to 12%. Carry 20 grand on margin at 10%, and that's roughly $1,000 a year of pure interest, quietly draining your account. Layer 5, the recurring stuff. The lines on the statement page nobody reads. Inactivity fees, $5 to $15 a month at plus 500, eToro, CMC, XM. IBKR and the ECN brokers don't charge it. Currency conversion, 0.5% to 2% every time your P&L converts across currencies. Market data at IBKR Pro, $10 to $25 a month for active U.S. equity traders. Withdrawal fees, $25 to $50 per international wire. ACAT's out, 50 to 100 at most U.S. brokers. None of this looks scary in isolation. Stacked up over a year on a low balance retail account, this is where most low fee brokers actually make their margin. Okay, 5 layers. Now watch what happens when you run them on 3 real trader profiles, because this is where that same broker opposite verdicts thing finally clicks. Profile A, buy and hold investor, $10,000 portfolio, 4 trades per year. IBKR Pro costs about $12 annually. Schwab, 8. Robinhood, 12. They're all within $4 of each other. The fee comparison is basically a tie. Pick the one with better research and the cleanest tax statement. Profile B, U.S. equity day trader, 200 round turns a month, 500 shares each. IBKR Pro lands around $1,010 a month. The commission line costs $400, but PFOF free routing saves you everything else. Tasty Trade, $1,200. Robinhood, $1,500. Same trader, same volume, same stocks. The execution penalty on PFOF turns free into the single most expensive option by $500 a month. Profile C, Forex day trader, 60 lots a month on Euro USD. IC Markets Raw, Pepperstone Razor, both around $480 all in. eToro Retail, $720, plus 500 fixed spread, $900. The raw spread ECN brokers cost about half what the commission-free retail accounts do, and the only reason you'd ever spot that is by running the 5-layer math yourself. So how do you actually do this for yourself? 6 steps. 1. Write down your real trade pattern. Asset class, average size, monthly count, hold duration, base currency. Use the trades you actually make, not the trades you imagine you'll make. 2. Pull each broker's formal fee schedule, not the marketing page, the key information document or the fee table. MiFID II and FINRA both require brokers to publish it. 3. Build a table. 5 rows, 1 per fee layer, 1 column per broker. 4. Convert everything to your base currency per month. Annual fees divided by 12. Conversion costs folded in. 5. Add the soft costs of switching. ACATS fees, time to migrate, tax lot complexity. This is real money. 6. Open a small account and run 3 to 5 live trades. Compare actual fills to your predicted cost. The platform almost always reveals one fee the comparison missed. And here's the callback to where we started. The same broker, cheapest for one trader, most expensive for another. Now you can see why. The 5 layers don't move together. Robinhood crushes a buy and hold investor on commission and gets crushed by that investor's day trading cousin on execution penalty. IBKR Pro looks expensive on the commission line and turns out to be the cheapest possible option once share count scales up. eToro is fine if you barely trade and brutal if you scalp. There is no universal cheapest broker. There is only the cheapest broker for your trade pattern. Run the 5 layers, run the 6 steps, open the test account. That's the only fee comparison that's ever been honest.
Run the 5 layers against your trade pattern. Full breakdown linked in the description.